The final budget is the cash budget. The cash budget is the most important budget of all. It shows the expected cash inflows and outflows. This budget lets us know if we have enough cash on hand to pay our bills or not. It is also the most extensive because there are supplemental schedules that need to be completed to prepare this budget. First, we begin with the beginning cash balance. This is the amount of money we had at the beginning of the period. We add any cash receipts. This is all cash that we're receiving. We will need to look at our other budgets for this, along with preparing a separate schedule. We will then subtract any cash payments. We also need to look at other budgets for this amount, along with preparing another schedule. We will then have our preliminary cash balance. From here, we want to see if our cash balance is enough. Companies usually want to keep a minimum balance in their bank account, just like you probably do. You may want to keep $100 in your account at all times. Is our preliminary cash balance more than that, or is it less? If we have enough, then it's adequate, and we can use the extra money to repay back other loans or buy securities like stocks and investments and put that extra money to good use. If we're short, it means that we don't have enough money, it's too low, and we'll have to increase our short-term loans. This would be using credit cards or taking out a loan from the bank. This should be very similar to what you do on a personal level for planning your bills. You start with what balance is in your bank account. Add all the money you're making from your job minus all of your bills. You get your final cash balance. Do you have extra? If so, you can buy some extra things. If you don't have enough, then you need to start using credit cards more or somehow borrowing the money to cover your bills. Let's do a practice problem with this. We'll be going over what those supplemental schedules look like after this. Number 6 on your classwork. Santos Co. is preparing a cash budget for February. The company has $20,000 cash at the beginning of February and anticipates $75,000 in cash receipts and $100,250 in cash disbursements during February. What amount, if any, must the company borrow during February to maintain a $5,000 cash balance? The company has no loans outstanding on February 1st. You should pause here and practice this problem and then unpause to see if you have it right. First, we start with the beginning cash balance. This is what we started the month of February with. What amount is that? It's $20,000. Add any cash receipts. This is the incoming cash. Once again, we'll use a separate schedule to calculate this, but for this problem, they just gave it to us. How much is that? $75,000. We add these two numbers together. This is our available cash. 20,000 plus 75,000 is 95,000. Next, we'll do our subtractions. We'll subtract our cash payments. How much is that? It's $100,250. We subtract that to get our preliminary cash balance. Right now, we are negative $5,250. You can already tell that this is probably too low because we're in a negative. We want to maintain $5,000. How much do we need to borrow in order to have $5,000 as our ending cash balance? Well, we need to borrow the $5,250 because we are negative. That will bring us back to zero, plus an additional $5,000 to give us the $5,000. We will need to borrow $10,250. If we had negative $5,250 and we add the $10,250 to it, we now arrive at $5,000 cash balance that we want. This final number should be the amount you wish to maintain. If we had anything extra, instead of taking a loan out, we would repay maybe previous loans or buy securities. In the end, your answer for the final cash balance would still be what you wish to maintain, whether it's over or under. We are now going to discuss the two schedules used to calculate cash receipts and cash disbursements. You would think that the amount of sales would be the amount of cash you were receiving. That would be true if the company only made cash sales. Most companies extend credit to other companies, giving them maybe up to a month to pay. For example, I could have made $100,000 in sales this month, but gave my customers 30 days to pay. So I wouldn't be receiving all $100,000 this month. I would only use the amount I plan on actually collecting. Another example is I'm working now in April, but I won't get my paycheck until May. When I plan my monthly budget, I'll include this money in May, not in April. The cash payment schedule is the same concept, but looking at it from the other side. We may have made purchases of direct materials this month, but we'll pay for it next month. We can have our creditors loaning us credit. Just like you may receive a bill now, but it's not due until next month. These two schedules are prepared the same way. We're going to do a practice problem for the cash receipt schedule. This is number 7 on your classwork. We have Jasper Company who has sales on account and for cash. Specifically, 70% of its sales are on account and 30% are for cash. Credit sales are collected in full in the month following the sale. The company forecasts sales of $525,000 for April, $535,000 for May, and $560,000 for June. The beginning balance of accounts receivable is $400,000 on April 1st. Prepare a schedule of budgeted cash receipts for April, May, and June. This first table is really used to help us prepare the main table. It's the second one that we really care about, but the first is just to help us split up the money before we do that. We made sales. 70% of the sales are on account, 30% are for cash. We want to first divide that up. The cash sales would be 30%, and the sales on account are 70%. Now the total sales for April are $525,000. 30% is cash and 70% is on account. So we'll do 30% of this number to give us $157,500. And then the remaining amount, the 70%, would be $367,500. We're going to do the same thing for the other 2 months. For May, the total sales is $535,000. Let's split it up 30% and 70%. Even though I'm doing it on here, you should all really try this. On your last test, there was a lot of problems that dealt with percents, and a lot of you had the decimals in the wrong place and weren't doing it properly. So please, please practice this. Do 30% of this number and 70% of this number. You should get $160,500 and $374,000. Finally, for June, total sales were $560,000. 30% of that number is $168,000. 70% of that number is $392,000. This just tells us the sales we made, how much of it is cash and how much of it is on account. The cash portion, we're going to receive in the same month. So my cash sales for April, I'm going to receive in April. My cash sales for May, I'll receive in May. And my cash sales for June, I'll receive in June. Now the sales on account won't be in the same month. The problem states that credit sales are collected in full in the month following the sale. That means that this $367,500, I'll actually receive that in May. This $374,000 credit sale I made in May, I'll actually be receiving that in June. The June amount I'll actually receive in July. And that's where this next table comes into play. First, let's put in the cash sales because that's the easy part. It's going to be the same month. The amount from April will go in for April. The amount for May, I'm going to receive in May. And the amount of cash sales I made in June, I'll receive in June. It's cash. You're receiving it right away. Now, all of these will be off a month. The sales on account for April, like I said before, I'll receive that in May. So this 367,500 will be in May. This $374,000 worth of sales I made in May, I'll receive in June. The amount for April, you'll need the month before this, the month of March. When we look up here in the problem, it does tell us that the beginning inventory balance is 400,000 for April 1st. So it does tell us this amount right here. Now you just add up the columns. Add up the 157,500 for April and the 400,000 that we're receiving in April, but it's from the month prior. We expect to receive $557,500 in April. Do the same thing for May and June. Should be receiving $528,000 in May and $542,500 in June. We would then use these numbers when preparing the cash budget. One thing I wanted to note is that this publisher for your textbook has kind of gone back and forth with the way the problems are set up. It used to be set up just like this, and I thought this was fairly easy. They have recently changed it, so I want to show you what it looked like since it's set up different than this classwork. This is an example from your homework. The first line is sales. Put in the total sales for each month, the full amount, and then subtract the portion that's going to be on account, the sales that they're going to pay you later for. Then input the portion that was cash and add that to the prior month's accounts receivable from the month before. And add those two up to give you the total at the end, totaling up the cash sale percent and the ending accounts receivable from the month prior.